Hello and welcome to my channel all about accountancy, where we convert your accounting problems into solutions. I am your host Professor Tanmaypvttutor, and today I am starting with a brand new series called Subsidiary Books. This is the introductory video of this series, hence I am going to tell you what do you mean by subsidiary books, what is the purpose of subsidiary books, why were subsidiary books invented, what are the types of subsidiary books, etc. etc. So without any further ado, let us get into the video. So the first question that arises in my mind is, what do you mean by subsidiary books? Subsidiary books are the subdivisions of a journal. Whenever a journal is divided into various small books, those small books are called subsidiary books. The division of a journal into subsidiary books is based on the type of the transactions. For example, there are books like cash book, purchase book, sales return book, etc. There are around 8 to 9 subsidiary books, but in our syllabus we are only going to learn 6 subsidiary books. So as I said, subsidiary books are a division of journal. So as the journal was the book of original entry, hence subsidiary books are also the books of original entry. So the next question that comes to my mind, why were subsidiary books invented? I mean, we just learned journal, right? So does the journal go into the trash and subsidiary books replaces it? No. If you are a small trader and you do not enter into a lot of transactions, you can bear with the journal. You don't have to make any subsidiary books. But if you are in a large organization, it is actually very foolish and tedious to give all the work to only one clerk to write it only in one journal. Previously, when accounts were written by hand, a single clerk used to write all the journal entries in a single journal, and the journal at the end of the year would be like a big pile of various pages. So in order to avoid that, it is better to keep a lot of clerks and divide your journal into a lot of subdivisions, and those subdivisions are called subsidiary books. So there were two main reasons for inventing subsidiary books. First thing is to divide the work into various people. Rather than just giving all the work to one person to write it in one journal, I will divide the journal into 7 or 8 books and I will appoint 7 or 8 clerks to write those transactions. Again, this is done only by large organizations. If you are a small organization, you are actually wasting money by appointing 7 and 8 people to write a few transactions. So it is always better to indulge into subsidiary books if you are a larger organization. If you are a small organization, you actually don't need them. As we all know, whenever a business transaction occurs, we convert it into an entry and then post it into the journal. But now we are going to divide all the business transactions into various subsidiary books based on the type of the transactions. So the first purpose of inventing subsidiary books was to save time and to maintain accuracy. Obviously, if a single clerk is writing hundreds of transactions in the journal, mistakes are meant to happen. So by dividing the work among various people, I can reduce a lot of errors. And the second purpose of inventing subsidiary books was to make future reference easy. Now how will it become easy, you ask? If I have a single journal, it is very difficult to find out only one transaction from it. However, if I have various subsidiary books, I will directly go into that subsidiary book and find out my transaction. Again, finding out a transaction is going to be difficult any which way, but it would be a bit easier than finding the transaction into the journal. With that said, let us see what are the different types of subsidiary books. Now, a subsidiary book can be further divided into cash book, purchase book, sales book, purchase return book, sales return book, and journal proper. Now, I am not going to explain you all these books in depth. I will explain them in my future videos, but let us see how to classify transactions into these books. So before classifying the transactions, we will have to know what do these books mean. So the first subsidiary book is cash book. All the cash transactions are recorded into the cash book. And by all, I mean all the cash transactions. May it be payment in cash, receipt in cash, goods purchased for cash, goods sold for cash, anything which has to do with cash will go into the cash book. So again, when I say cash, it does not only involve cash, it also involves transactions done by check. So even bank goes into the cash book. Now cash book can be divided further into various types, but let us not get into the further types right now. The next book over here is purchase book. So purchase book records credit purchases of goods. So many people do a mistake over here. Whenever they see purchase, they put it into the purchase book, which is completely wrong. Purchase book records only credit purchases of goods. Now you would say, why not cash purchases? Because obviously when cash is involved, it goes into the cash book. The first preference that you are supposed to give is to the cash book, irrespective of what your transaction is. If it involves cash, put it in the cash book. So purchase book will record only credit purchases of goods. Again, if I have purchased furniture on credit, it will not go into the purchase book, because whenever I purchase furniture, the journal entry is furniture to the other person, right? It is not purchase to the other person. Purchase account is opened only for goods because goods account does not appear into the books. Hence, purchase book records only credit purchase of goods. Similarly, sales book, purchase return book and sales return book apply the same logic. So, sales book will record credit sales of goods. Purchase return book will record credit purchase return of goods. Sales return book will record credit sales return of books. And the last is journal proper. Any transaction which does not come in these books goes to the journal proper. The example that I gave previously, furniture purchased on credit, goes to the journal proper because it does not involve any cash, so it will not go into the cash book, and it does not involve any goods, so it will not go in these 4 books as well. So now when I see business transactions, I am not going to convert all of them into journal entries. I am going to classify them into the various subsidiary books. So if cash is involved, I will put it into the cash book. If I have purchased goods on credit, it will go into the purchase book, so on and so forth. In order to understand how to classify your transaction into various subsidiary books, let us take an example. So this is the example that I have taken. Let us classify these transactions into various subsidiary books. It's very easy to understand. So the first rule that I always tell my students is to find whether there is any cash involved in it. If cash is involved, it directly goes into the cash book, so you don't have to bother your brains anymore. But if cash is not involved, then find whether goods are involved in it. And if goods are involved, it has to go into the purchase book, sales book, purchase return book or sales return book. And if goods are also not involved, it definitely goes into the journal proper. Simple? So let us see. So the first one is goods purchased from George. My first question is, do you see any cash involved? No. Hence cash book has been eliminated. So are there any goods involved? Yes, and I am purchasing the goods. So this will go into the purchase book. Easy. Next one is rent paid. So rent paid is a nominal transaction and I have already paid the rent. And when I say that I have paid the rent, it is assumed that I have paid the rent through cash. Hence this will go into the cash book. Then land and building purchased on credit. Is there any cash involved? No. Are there any goods involved? No. Which means it directly goes into the journal proper. Clear? Till here, I think it is very easy. Next one. Furniture sold for cash. First question. Is there any cash involved? Yes. So this goes into the cash book. Goods sold to Leila. Cash involved? No. Goods involved? Yes. And what am I doing? I am selling the goods. So it will go into the sales book. After that, goods returned to George. Cash involved? No. Goods involved? Yes. I am returning the goods to George which I had previously purchased. So this is a purchase return transaction. So purchase return book. Next one, goods returned by Leila. Cash involved? No. Goods involved? Yes. And what is happening over here? Goods are returned by Leila which I had previously sold to her. So sales return. And last but certainly not the least, a very important transaction. Goods lost by fire. Cash involved? No. Goods involved? Yes. But what is happening with the goods? Am I purchasing the goods? No. Am I selling them? No. Purchase return? No. Sales return? No. Nothing. Which means it goes directly to the journal proper. So if you haven't understood the pattern yet, let me give you some rules. First rule is to find out whether cash is involved or not. If cash is involved, it goes into the cash book. Rule number 2, if cash is not involved, search whether goods are involved or not. If goods are involved, then see whether they are purchased, sold, purchase return or sales return. If none of these is involved in the transaction, it means it goes to the journal proper. So if you want to reach the journal proper, you have to use the theory of omission. The theory of omission means you have to eliminate all the factors one by one. That's why I always call the journal proper the others book. Anything that does not go into other subsidiary books goes to the journal proper. Again, a quick summary of what we did today. We did subsidiary books. What do you mean by subsidiary books? When a journal is divided into various small books, those small books are called subsidiary books. What is the advantage of making subsidiary books? First advantage, it saves time and maintains accuracy. And the second advantage, it makes future reference easy. And we also learned what are the different types of subsidiary books and how to classify them into various subsidiary books. At that note, I will end today's video. If you have understood today's video, then please like it, share it, subscribe to my channel and hit the notification bell so that you never miss a new upload. I upload videos every Wednesday and Sunday. If you have any queries or suggestions, you can use the comment box down below. See you in my next video. Till then, this is Professor Tanmay Kesarkar signing off. Good luck and take care.